Namaste friends, welcome back to GyanVeda channel. In today's video, we are going to discuss about the practical aspect of Public Provident Fund, how this can impact your growth in the investment for long run. So please watch the video till end so you will get complete details. Anyone visited the channel for the first time, please don't forget to subscribe and press the bell icon so you will get notifications for our new videos. Public Provident Fund is not new for any one of us. Many investors have been using this opportunity to invest since long time. So we are going to discuss this along with example. Why do we think that it is a must product for every Indian citizen and how the power of compounding works in our investment result? Before we start the discussion, one question. Why do we invest after all? There must be certain purpose. We want to save our money. We want to get a good amount of return based on the wealth growth. There is certain type of risk involved in every aspect of the investment and that impacts our return. In the same aspect we are going to discuss in today's video also. PPF stands for Public Provident Fund. This scheme has been launched by Government of India in 1968. The objective was to create a wealth for the future of the citizens. There is one institute under the Ministry of Finance called as National Savings Institute. This handles the scheme. This scheme comes with a 15 years of lock-in. So totally we need to spend 16 years within this scheme to get the returns. Why do people invest in PPF fund or why should one invest? This is considered as one of the safest investment in India because this is not only having the tax saving funds and it is backed by government of India, but it is having a benefit which is called as triple E or EEE. It stands for exempt, exempt, exempt. So let's take a look what is this triple E benefit. There are three types of exemptions given in the PPF investment. So first exemption is the benefit under Income Tax Act 80C. Exemption 2 is that there will not be any tax on the interest earned on this investment. What is the capital gain we have got at the time of maturity? Entire corpus is tax free. So you don't need to pay any tax right from the investment, interest and the maturity benefit of this scheme. Who are the people who can open this account or who are eligible for this one? So not everyone can open this. You must be Indian citizen above 18 years of age to open this account. If you are NRI, you are not allowed to open the PPF account. Same way, you can't open PPF account for Hindu undivided family account. But if you are HUF investors, the individual investors can apply for PPF account. Joint account is allowed under the PPF account. If you are minor, then your parents can open the account on behalf of you. Where can I open the PPF account? So this account opening facility is available in public sector banks, in post offices. Even nowadays, private sector banks are providing the facility to open the PPF accounts. Can I open the PPF account online? Yes, of course. Nowadays, if you want to open the PPF account online, you can visit the bank website, fill the form online, and then you can open the PPF account. There are certain rules that we need to follow in the PPF account opening scheme. You can open maximum one PPF account per person. There is a limit of the investment. The minimum investment per financial year is 500 rupees and maximum you can deposit 1 lakh and 50,000 rupees. If you invest or deposit more than 1,50,000, this amount will not be considered for the interest and other benefits of this PPF scheme. There are other PPF rules like the 500 minimum amount deposit per financial year is mandatory. In case you don't deposit this amount, you will be liable for a penalty of rupees 50 for that year. And how many years you are having this defaulting, you need to pay 50 per units. But this amount might get changed, like in the COVID times, government has waived this fine. Also, there will be an interest payout once in a year, that is on the date of 31st of March every financial year. The maximum number of installments in which you can deposit the amount is 12. So you can do maximum 12 times fund deposit in your PPF account. In your PPF account, you can deposit the amount by cash, by check, by demand draft, or you can even transfer nowadays with online account transfer. How will you get the interest calculated on the PPF account? Every quarter, at the beginning of this quarter, you will get the interest rate declared. Based on that, the interest calculation will be done monthly basis, and this will be paid on 31st March of that financial year. So one tip is there: if you want to invest this, please deposit your amount before 5th of that month, so you will get interest for that entire month. When you say that there is a 15 years lock-in period, does it mean that we can't do this premature close for this PPF account? There are certain conditions. After 5 years, there is a possibility that you can close the PPF account prematurely. How? There are certain reasons, like if there is any critical illness for the applicant or spouse or child, you may apply for premature closure. Other reason that if you are having the requirement for your child's higher education and you have a valid proof available, you can apply for premature closure. There is a penalty of 1%, so you will get 1% less interest for that entire tenure. Suppose the interest rate is 8% on an average, you will get 7% interest on your investment. In case there is an applicant demise, the family or the nominee can apply for the premature closure. There will not be any penalty in. After completion of 3 years of PPF account, your account is eligible for a loan. You will not get loan for the entire amount. There are certain conditions. So we'll take a look in the next part. As we discussed earlier, after 5 years, your account get eligibility for conditional premature closure. After completion of 6 years of the PPF account, the account will get eligibility for second loan also, provided you close the previous loan if you had taken anything after the 3 years completion. It is possible to do the partial withdrawal also after 6-year completion of the PPF account. You can withdraw 50% balance of the previous financial year, and there is possibility to have only one withdrawal for that entire financial year, and there is no tax or no penalty even for this partial withdrawal facility. As we know, 15 years is the maturity period for PPF account, so you can withdraw your complete amount on the maturity. There are other possibilities also that you can have. You can apply for 5-year extension of this account, and there is no limitation how many times you can apply for this extension. So every 5 years, if you want, you can apply for extension and take benefit of the interest rate and the tax exemption. Whenever your PPF account gets a loan facility or eligibility, the eligibility will be only on the 25% of the balance in the previous financial year. You need to have the repayment in 36 months. There will be only 2% interest applied for this loan amount. But in case you could not pay this within the time, this interest rate will go up to as high as 6%. Let's take one example based on the current rate. As of now, the interest rate is 7.1%. So we have considered the same interest rate for entire period of the 15 years and calculated. Let's take an example. You have deposited amount 10,000 per month. You are depositing it every month before 5th. So your annual amount will be 1,20,000 rupees. So your entire principal for 15 years will be 18 lakh rupees. The interest rate considered as 7.1%. Now your total interest calculation will be 13,50,680 rupees. So your entire amount at the maturity of 15 years will be 31,50,680 rupees. Now let's see, you have applied for an 5-year extension. We have not considered here any additional investment on those 5 years. Even in that case, your maturity amount after 20 years will be 44,50,000. Let's say you have applied another 5-year extension, your maturity amount will go up to 62,70,000 approximately. If you apply another 5 years, so total 15-year extension, your amount will go up to 88 lakhs 40,000 approximately. If you see another 20 years extension, so another 5-year extension, sorry, so total 20-year extension, in that case your corpus amount will go up to 1 crore 20 lakhs approximately. So you can see here why we initially made a statement that it is a must have account for every Indian citizen. How the compounding rate magic will go do here. So you can see that entire 1 crore 20 lakhs approximately, all this amount will be tax exempted. So you don't need to pay any tax. Let's see someone withdrawn this amount after 15 years and deposited somewhere else like fixed deposit. You may not get the tax exemption like this one. So please consider this factor and then take a call whether you want to go for PPF account or not. There are certain tips that we want to give you in case you want to have the PPF account scheme facility. We suggest that you should start PPF account opening as early as possible at early age. You can plan as per your saving ability. Keep your passbook updated so you will get to know what is the balance in your PPF account. Always make sure that you update your nomination. Keep watching the interest rate so you will be aware whether you are getting good returns time to time or not. If you want, or if you are having possibility, then please apply for the extension. So you can apply the 5-year extension n number of time. But in case you want to withdraw entire amount, you cannot go for extension. If you want, you can reapply after that, another 15 years lock-in. So what you can do better way, you can do some partial withdrawal and keep some amount in that account, so you will still have the eligibility to earn the interest tax free. Also, please keep checking the current terms, conditions and rules for the PPF account from the Government of India and National Savings Institute. For reference, we have taken some links from the National Institute of Savings or National Savings Institute. So you can refer these links. We will give you the same links in the description box also. So you can take a look at what were the previous historical interest rate, what are the application forms in case you need to do any kind of application for this PPF account. If you still have any questions, so please mention these in the comment box. We will try to come up with the answers for your questions. Please don't forget to subscribe, like, share, press the bell icon so you will get notifications for our new videos. And this will make your investment life happy, and same way it will be helpful for your friends also. Thanks for watching. Happy investing.